But I think central bank, right? So it'll be something which, of course, started
Yes.
with Fed, but we had some Remos telling me some 20, 25 central bank actions.
Yeah, I think she had a really long list. I focused on only the 3-4 major ones. 22 was quite a handful for me. But just before we introduce our guest on the show, just a quick roundup of why this has been such an important week from the central bank perspective. Let's start with the Fed. Now, we all know 25 basis points was delivered, but the format of what they're saying about 2025. Now, the Fed was supposed to do 4 rate cuts in 2025. Suddenly, what are they saying? That no, we are going to do 2 rate cuts. Why is that? It's very simple. Growth in the US is looking very strong and inflation is proving to be sticky. The growth number, in fact, when we came in to trade on Friday, we had the final reading of the third quarter US GDP. And look at that number. It's so strong at 3.1%. So the GDP projections for the Fed itself are now much, much better. In its policy this week, the Fed acknowledged the fact that it's probably sort of miscalculated or underestimated the strength of the US economy. They were expecting 2% growth in 24. Now they're saying it's going to be 2.5%. And the estimates for next year are about 2.1%. Like I said, the third quarter GDP number is red hot at 3.1%. Now come to inflation. Inflation last couple of months has been anyway trending higher back in the US. 2.1% in September, 2.3% in October. And tonight, we are going to get the November PCE number, and the market is on the edge. A lot of the reason why we had a sell-off on Friday was that the market is very nervous about tonight's number, and it's expected to be again above the Fed's comfort zone of 2%. So that's the problem over there. Now, as a result, we saw the reaction playing out in asset classes. Yields have been shooting higher, almost 4.5% on the US 10-year. If you talk about the dollar index, it's at near 2-year highs. I mean, we're talking over 108 on the DXY. And that's playing out against a lot of currencies, the euro, Asian currencies like the rupee weakened to, of course, that level of 85 this week as well. Now let's move about the, and Wall Street, of course, kind of had to deal with the shock. It wasn't prepared for it. And the net result is a decline of anywhere between 2.5% to almost 3.5% on different US indices this week. So far this week, it's just 4 trading sessions, mind you. Now, on the other central banks, the Bank of Japan decided to hold its fire. Though it's dealing with sticky inflation, the BOJ did not cut rates. Inflation, by the way, in Japan is also trending higher. November inflation is 2.7% versus 2.3% in October. But the BOJ is saying, let's wait and watch. Let's see what happens once Donald Trump takes office, and then we'll decide. And finally, you had the BOE, which also for the time being didn't cut rates. So the other central banks are waiting and watching to assess what happens with the shift in Fed policy itself. But that was the big highlight. And I think the markets have taken their time to digest it, right, in terms of this new narrative that the Fed has very clearly now laid out.
Yeah. Absolutely. And I think let's actually take some of these points to Ashwini, who's with us, Ashwini Agarwal, founder and partner at Demeter Advisors. Ashwini, good to have you with us here. Thank you for joining us. So, the retail part of the market is still hopeful.